Hello friends, so today we'll see regarding deduction under 80C. So this deduction is eligible for the individual and HUF. HUF means Hindu undivided family. Okay, so this deduction is eligible only if you are opting for old regime of income tax. Okay, so if you are opting old regime, then only you can claim this deduction under 80C. Okay, so for this 80C, it is the section for the investments or deposits made by the individual HUF in particular, like LIC or fixed deposit. Okay, so for that they will have a deduction in the whole income. So for that, first one is, and first we will discuss about the limit. What is the limit for the income tax? It is, the deduction is 1,50,000. Okay, so up to 1,50,000 we can make the investments, or and we can have a deduction. So first, it is the investment in LIC premium. If it is an individual, if they are making any investment or paying any sums towards LIC, okay, either of himself or also individual or spouse, his or spouse, or any child of the individual. Okay, so if you are making any insurance premium for these three persons, like for himself or herself, for spouse or any children, that is eligible for deduction. And if in case of HUF, okay, it should be life of any member if the payment is done. Okay, so for that also we have a limit, like if the policy it is issued before 1st of April 2012, then 20% of actual sum assured, that is allowed as a deduction. If the policy is issued on or after 1 for 2012, it is before 1 for 2012, then it is 20%. If it is issued on or after 1 for 2012, then 10% of sum assured is allowed as a deduction. And if the policy is issued on or after 1st of April 2013, persons with disability, okay, that is section 80U. If any person is with disability or something, so that time it is 15% of the sum assured. Okay, next point is, so if you are making any contribution to superannuation fund or annuity contract, then RPF, that is recognized provident fund. Okay, then next one is statutory provident fund. Okay, next one is if you are making any deposits in PPF, public provident fund. Okay, next one is if you are making an investment in NSC, National Saving Certificate 8 or 9X. Okay, the NSC certificate is issued by government. Then any notified insurance, like of LIC, so that will be uh, for example Jeevan Dhara, Jeevan Akshay. It is the LIC annuity. Okay, annuity plan. If you are making any investments in these plans, it is also eligible for deduction. Okay, and if you are making any subscription to mutual fund units, that should be equity linked. Equity linked, that means the mutual fund should be making investments in equity funds, not debt funds. Okay, any contribution to pension fund set up by mutual fund under okay, if it is the pension fund is set up by mutual fund under section 1023D, or pension fund by UTI, Unit Trust of India. Okay, so any subscription to National Housing Bank, NSB, National Housing Bank, any deposit scheme, if you are depositing anything, it is at then next one is, so if you are paying any tuition fees of your child, okay, so that tuition fee should not include any donations or any like payment towards development fees. Okay, and that should be within India. The institution should be within India, allowed up to two child, not more than two. So that is allowed as deduction. Okay, if you are making any fixed deposit which is more than 5 years, the term should be more than 5 years, that is also eligible. Okay, if you are making any 5-year term deposit in post office, okay, 5 years, then if you are making any contribution to Sukanya Samriddhi account scheme is there of government, if you are making any deposits, if you are making deposit in senior citizen savings account, that is also eligible. Okay, or you can make any like subscription to equity share or debentures of any infrastructure company. Okay, if you are any, like, it should be notified by government, equity share or debenture eligible for public issue of public sector company or public sector financial institution, that is infrastructure company. It should be notified by government. Alright, okay, so these are the contributions which are made under 80C, which are eligible for the deduction. So we can just recheck it. First is, if you are making any LIC, okay, and that should be individual, spouse, or any child, HUF, the any member of the HUF. Okay, next is superannuation fund, RPF recognized provident fund, statutory provident fund, public provident fund, NSC certificates, LIC annuities, that is Jivan Bima, Jivan Dhara, Jivan Akshay. Okay, if you are making any contribution to mutual fund, that should be equity oriented, any pension fund, any deposits in the National Housing Bank, any tuition fees paid for study of child, that should be only two child, and that should be only in India. Any donation or development fees, that is not included here. If you are making any FD for up to 5 years in a national, that should be national bank. And if you are making any FD in postal bank, that is 5 years term, and Sukanya Samriddhi account. Okay, any senior citizen savings account, equity shares of any infrastructure companies, that are eligible for deduction under 80C. But you have to remember, so up to maximum 1,50,000 you can claim. If you are making any deposits more than 1,50,000, for example, you are making 2 lakhs as a deposit, but you can claim up to 1,50,000. Okay, that balance 50,000 is not eligible for the deduction. So as per your income, you can plan this kind of investments, and you can claim the deduction under 80C. So you can subscribe my channel Orogyan, and you can share with your friends and ask them to click on the bell icon to subscribe. Okay, so if you subscribe the channel, you will get notified for my new videos, and can get the knowledge whatever. If you want any new videos, you can comment me in the comment section. Thank you.